up. Just everybody's they're looking in the wrong direction. Sitting there going, guys, the easy win, the softball, the fat pitch is where that money's going. You know what I mean?
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots, and I'm joined as always by the brain trust himself, and I'm not going to forget to turn on his mic there, the brain trust himself, Mr. Chase Taylor. And we are back from a bit of a respite, at least on my part. And I got to apologize to everybody. We did record a Wednesday and Thursday episode. Well, we did not. The royal we did.
They were the best episodes in the history of the show, by the way.
Bangers. It's always the way it works, right? But
cutting room floor.
While I was down there toiling for the company in Arizona, our media guy was down there with us. And I think what happened is he assumed that since I'm not
toiling as well.
Yeah. He was toiling with me.
Yeah.
I think he assumed that there was no episodes recorded, and unfortunately there were. So I'll actually have him push those out. So we can, if people want to go back and listen to the retro, go back, like going back in time a few days. But yeah, we'll get to that. Also,
speaking of going back in time a few days, I used to, on purpose, read The Economist with a 6-month lag. I bet it's actually fascinating to read things with a 6-month lag.
It is. I always like doing that, right? Going back and catching them. That'd be interesting. When was the last time you did that?
I had to stop like in the last 6 months, probably.
Oh, what was it? Was there a pattern?
Yeah, it's just easier to see extrapolations that people are doing in real time, where like a thing becomes like the thing, and then 6 months later, it's like doesn't matter anymore.
Yeah,
like it's actually sad, and it makes you want to back away from keeping up with the headlines and the thing of the day every day, because you realize like 80% of the thing of the day or the thing of the week, it doesn't really matter 6 months later, a year later.
I feel like that's just part of being an adult. Should be.
Yeah, but in our line of work, it is so hard not to see shiny thing and be like, how important is that every day?
Yeah, that's true.
And fall into the trap of being like, seems pretty important. And then 6 months later, you're like, okay, well, who cares?
Well, and then the tough part about it too is a lot of times things that pop up that don't look important end up being important.
Yeah, that's a more important skill to try to develop. And that, again, you can find that a little bit. And every once in a while, you would be like, there's some big thing that's kind of emerging.
Yeah.
And then you see a little article about it and you're like, ooh, this person was on top of that. That's impressive.
Yeah. Well, and the other thing I found too is those are good people to track.
Yeah.
Because that seems to be a skill that keeps reappearing, right? Usually
identifying importance before it's important is a big deal.
It is. It's one that I'm not that good at. Not generating myself. I'll hear ideas from other people. I'm good at collecting ideas from other people. I'm not usually the one that comes up with it though. I'm a big believer in, I'm never married. I know you're like this too, but I'm just not at all married to what I think. If I hear a better idea from somebody else, just kind of the agnostic part of investing for me was, I think when you start out in this business, I think everybody has that element of, no, I need to get it right my way. And then after a while, you're like, dude, I don't care how we score the points. Right. Just get them up on the bloody board. You know what I mean?
And I think when you think about the future, I can't remember there's a famous trader that used this like way of thinking of it. Is like it's almost like trying a suit on or something. Like new ideas come along, how you think the world might look in a year. Like, let me try this on, see how it fits. And then and then some new stuff happens. You're like, that don't fit. That ain't right.
Yep.
Let me try this other one on. And then next thing you know, something fits.
Who, you don't remember who that was?
It's one of the big famous, traders of the last 100 years. But
and then even when you find that is such a good analogy. I've never heard it. Because then even when you find a suit that fits, you're still gonna have to do some tailoring, right? There's gonna still be some alterations. And that's kind of the way, in my view, a portfolio should look, right?
100%.
Just because we start off on this track and we get confirmation that we've got the vessel pointed in the right direction, but it doesn't mean we're not, trimming the sails along the way, for lack of a better term, and making the fine alterations here and there. What, did you just see something? You had that look on your face.
I asked AI and it said something about Bruce Lee. I'm like, I wasn't looking for a Bruce Lee quote. He was also not a trader.
Be like water.
That I know of.
Be like water.
Yeah.
He'd have been an awesome trader though, I think.
Well, the Be Like Water thing is it's a great place to start trading your journey. So
it really is. Okay. So to go down the agenda for the show, if you will, we of course have to talk some football, but we will save it for the end.
It's charitable given what just happened.
Yes, it is charitable. I'm biting my tongue. Could be a lot of "I told you so" that I would like to throw around there. But anyway, the other thing is, since I was gone, we had some interesting days last week.
Yeah, it definitely got volatile.
Yes,
and a lot of it around, we talked about this a lot last year, but a lot of it around the hyperscaler earnings, because they said, "Oh, you guys thought we were doing 140 trillion and or I might as well say trillion these days, billion. Nah, we're going to spend 200 billion this year." So you had multiple of these Mag 7 companies come out with their realized CapEx for the year projected to be 40 to 60% higher than the crazy expectations for the analysts already were. So it's not like that, it's one thing to jump over low expectations, but we're talking, these were aggressive expectations, and then it's blasted them. It's intense.
Well, you know what I think is so weird is that those things are turning the hyperscalers into the to be or not to be type that. Well, does that mean we should buy them? We should sell them? And I'm looking around going, why are you guys even thinking that way? Why don't you go for the guaranteed win? Go buy the stuff they're spending the money on.
Right. We have turned the biggest companies in the world into wildcatters, but they're wildcatting for AI instead of oil. Like it's kind of a fascinating. They're making all in or close enough to all in bets, on a drill hole that you better hit.
Well, and wildcatters weren't trading at 10x revenue.
Never. Yeah.
You know what I mean? And that's the other thing where I'm looking at these guys and I'm going, guys, whether they benefit or not, you're not asking the right question. Are they going to win? They're betting 200 billion. They better.
Yeah. They think they are, or they wouldn't be doing that.
Yeah, but they'd better.
Right.
And then here's the deal. When do you think that's just going to be a 70% margin business right out of the box? No, man. Once again, I just don't. Everybody is, in my opinion, and I think that returns and everything backs that up. Just everybody's they're looking in the wrong direction. Sitting there going, guys, the easy win, the softball, the fat pitch is where that money's going. You know what I mean?
For now it is. Yeah. There will come a time.
Yes.
Where the people that turn it into the massive, value creating labor arbitrage that it will become, they're going to make a lot of money. But even then, it doesn't necessarily have to be the people that are on the the production side of the intelligence. It doesn't mean you're the one that captures the use cases of the intelligence. So you may just be the commodity on the front end, right?
Yeah, and it's just so funny how people get so concerned, and I'm like, or so caught up in it and so fixated, and it's like, well, this is going to be a big deal, and you're like,
yeah, no one disagrees with that, honestly.
Well, no, but again, so I look at them and go, okay, to an investor, what does that mean? And you're like, some of these things are going to go up 3, 4, 5 times, and I'm like, yeah, but we've had multiple positions in the portfolio up 5 to 10x in the last 16 months. It's again, and I was thinking, and I'll save the majority of this for our football conversation, but I was thinking and listening about roster building on the drive in from work about, football stuff. And I was like, building a portfolio is a lot like building a team, right? You've got these teams out there that are like, what are we going to draft? Well, let's see what we need. We need some more offensive linemen, so we're going to draft those. Never the best way to draft. It just doesn't work that way. You take the best player available. And investors we don't care what the business does, guys. We care how they do it, right? At the end of the day, I don't care if you make your money selling bubble gum or you make your money selling software. Now, are there aspects or characteristics of certain businesses that are more attractive? Sure. But all that means is that business that's less attractive, I just need to buy it at a cheaper price, right? And it's all predicated on that. Whereas, are you in AI or not? Well, yeah, we've got some exposure, but you're asking the wrong questions, right? Yeah, I think AI is going to be a big deal. Go look at the valuations of the companies. So does everybody bloody else, right? That's no edge there. You're not telling me anything I don't know. It's like these conversations we've been having with our clients. They're all excited about SpaceX. And I go, that's probably why we're not going to buy it, guys. Why? When all of you are all excited about a stock, it's not going to be cheap. It's going to be way overpriced. It cracks me up though. It's that, like you said, we love shiny things and we get all attracted. You're like, guys, the name of the business is to grow your capital as aggressively as you can while taking as little risk as possible. When you're buying something that is priced to the moon that everybody is talking about, you are taking on massive risk. And if nothing else, just extreme price volatility, right? And to go to your point, this is one of the reasons that you start getting freaked out. Anything goes up too much and too many people start talking about it.
Yeah, I can't do it.
Well, it's just not where you find. And I'm trying to explain that to people. I go, guys, it's just not where you're going to find any value, and you're not going to find opportunity.
The risk reward, that ratio is just on average not good with a chart that's about to bend back to the left.
No.
This is how it is. I mean, you saw it with silver. Like this chart was about to bend back to the left, and then just a 30% header in a day, like that was baked in. Like you were taking that risk whether you realize it or not because of what had occurred the prior 6 weeks. Same, you could say the same for all. There's so many different asset classes that had parabolic blow-offs and then gotten smashed. Even if they were a great asset, they weren't a great asset at a great price.
Yeah,
and the way to guarantee something like that, like I said, is if everyone loves it and everyone owns it, and then the marginal buyers left and the marginal sellers left are a big difference,
another one, this is a little bit off the beaten path, but I do think it's another thing to bring up. Anybody out there selling you certainty, right? Bitcoin's a classic example. How many guys do we have out this year talking about, oh, it's going to 1 million this year. It's going to 200,000. And look, it still could. Who knows? But I'm just telling, perfect example, guys. If they were 100% wrong about the trajectory of Bitcoin 3 months ago, what does it tell you? It tells you that they don't know. Right. And they have never known. Everything that you think they have gotten right, it happened to go the way they forecasted.
Yeah. And everything in markets is totally probabilistic, not deterministic. So there's no point in putting targets on stuff, honestly.
Especially with that. When these guys come out with their price targets for crypto, there's no cash flows. You know what I'm saying? Like, meaning other businesses, you can make much more sound projections. Just by definition, there's cash flows. When I hear people saying it's undervalued, Bitcoin's undervalued, you may be right, but what do you, on what scale?
Yeah, you would have to only look at the flows from investors and things like that to come up with that, because there's no,
and that defines value, right? Flows from investors define, because if that's the case, then we'd still be trading tulips.
The greater flow.
Yeah, I mean, tulips had a lot of flow,
right?
I think it comes down to, I mean, you could take this far back as like biblical times. People want a king, right? People want somebody that's going to be, oh, I've got a guy. I'm sure that we've got clients. Now I tell them this. I go, listen, we're going to have years where we're going to perform. We're going to have years where we get things wrong. We're going to have years where you're not that happy with me. Why? Because I'm a person. And if I'm telling you that we've got this new way to do things where we're going to avoid the pain and we're the only ones that can do it, run. That it's the hallmark of a charlatan.
Yeah. Only in incredibly inefficient markets is that kind of stuff possible, where you can actually almost guarantee a great return with very little risk. Like I think about like Ed Thorpe ran basically just arbitrage hedge fund, where this is before people even knew how to price options or warrants, and he would just find mispricings in warrants and basically make money on the arbitrage between the warrant and the underlying. That was it. So basically a riskless trade, more or less, that just captured a spread, and
go long and short on the different.
You can just make whatever your 14% or whatever, like basically every year, no matter what the market did. almost all of those kinds of opportunities are long gone now.
Yeah.
Like there's nothing really like that.
Yeah. No, the only way you find those kinds of opportunities now is literally by going into markets that nobody's in.
Right. And the arb now is just to go into the dumpster to go looking for value, honestly.
Yep. And the other key part that requires is patience, right? Because it's there because nobody's paying attention to it. And like we've said a million times, just because you started paying attention to it doesn't mean everybody else is going to, right? And you got to wait for those, which is one of the reasons that you and I, well, I don't want to speak for you, but because we have different approaches, but there's a lot of our approaches that are similar, which is like, my whole thing, value of the catalyst. If you find it, great. I'm going to buy that value. I'm going to watch it, but I'm going to watch for something to change, right? I'm going to watch for it because I don't want to be sitting on something that's incredibly undervalued for 5 years and not make any money doing it.
Right. I mean, before the platinum group metals took off, I was worried that that's where I was with that. That hey, this is taking too long. Maybe I'm just wrong.
Well,
so
there's a real part to that because the longer it takes, by definition, it compresses your returns.
Yeah.
It's just
right. And it's a perfect example of that is like you'll see an asset that that's the only thing they'll own, right? They're like a one issue voter. They're a one asset investor. It'll do nothing for 15 years and then have an insane year. And they're like,
I killed it.
I showed you. So like, yeah, but like, let's annualize that back over the last 15 years and you'd have been better in cash.
Yeah, it's you did 9% a year. The Wilshire 500 just beat you, man.
Like, come on,
or the Wilshire 5000 just
right.
beat you over that same period of time. What other things we got now? What got me going on? Well, let's get a rundown of the markets here.
I pulled it up because I was about to forget too. So S&P was up just shy of 0.5%. The Q's up 0.77, 0.7 for IWM, and then kind of a reversal of what we've been seeing, but Mag 7 smashed equal weight. Mag 7 up 1.16, equal weight up only 0.06. If there's anything that's been a trend lately is equal weight and Mag 7 or equal weight S&P, they're not even close to the same return on any given day. It's usually one smashing the other, which, I mean, all vol seems to be that way. All world XUS up 1.2, so smashed the S&P. That's because the dollar was down 0.84.
Where's our level on the DXY right now?
You are at 96.86, and this is incredibly important because and trend lines can be drawn differently by everybody, but this is one where like just about anyone's going to draw this trend line the same way. It's a 15-year uptrend the dollar's been in. We just broke it, and then we retested it from the bottom, and as of today, you're getting rejected by it. So if you close February, which is still a couple weeks away, right, below that where that line is, then you've not only broken that trend line, but you retested it and failed. So for just pure technical speaking, the dollar, at least today, looks ugly. Now you go up 2% the next week and it looks fine, but as of today, it looks ugly. Bitcoin just under 70K, basically flat. Oil up about 1%. Gold up 2, silver up 7.8. So the vol still cannot escape the precious metals. Other than PGMs, they were less than 2% moves today. Copper up 1.3. Yields literally flat across the curve. As far as single names go, Oracle kind of notable to me. They were up 9 and change, and they were up big Friday. This is after they just went, I mean, straight down. You had a complete washout in all things software. And the Oracle kind of was leading the charge there. But you've had 2 big bounce back days. And again, it was right on a trend line. So it tested its trend line, bouncing vigorously off of it. It'll be interesting to see, how long that can last, if it can. Vol was down about 4%. You had EEM up 0.7, LATAM up 1.9, China Tech up about half.
This is kind of a scary place, even for technical analysis. And here's why I think that is. When you see, like talking about Oracle specifically, when you show me that downtrend line, I'm so much less confident in that downtrend line than I would be in normal situations, because that line was formed off of significantly different future outlooks and situations than Oracle is currently presenting investors.
But you're already in I think you basically hit a 60% drawdown when you started to bounce off that trend line.
I thought it was 65.
So he was saying it's been crushed.
Yeah, it's gotten smoked. But
it deserves it.
But this is one of those weird things about right now, which I think could catch a lot of people off sides. Like I said, usually, if your technicals, I think, are like the most valuable when the less factors have changed over time. You know what I'm saying? Like when you're looking at a company that's bouncing off a certain trend line and you're like, oh, last time they bounced from this level, this was going on. Now this time they should bounce from that level too. When you've got companies like Oracle testing those downline, it's just, a lot less because like I said, the last time you were at that spot, there was so much, it was a different company.
I will say this. I loved the trend line from the perspective that the sentiment, the positioning, like the sentiment was,
it got bombed out.
Could not have been worse for software in general. So the fact that it was hitting a big trend line with everyone hating it was like, this is probably gonna work, at least short term now. Bouncing off of it and having a real move higher, two totally different things. So far, you just bounced off of the trend line, but
yeah, it'll be interesting to see the way that these hyperscalers continue to
and they're not just selling bonds; they're selling stocks. So they're selling, it's. I think Google today, first was reported they're going to sell 15 billion in bonds, and then they went ahead and did 20 because there was so much demand, which it keeps happening too. These hyperscalers come out like, we're going to sell a little bit of bonds, and then there's so much demand. They're like, oh well, a little bit and a little extra. And I think they continue to get great terms on them and everything, but just the fact that they have to sell bonds bothers me to begin with.
Wonder what the yield? Do you know what the yield on that new issuance is?
I'll see if there's any information out about it yet.
I'd be really interested to see that because there's been a lot of, over the last 10 years, there's been some very strange debt offerings.
Yeah, most of these have been very, very tight, spreads. You're not getting much for it. And they've, they're doing a whole bunch of different maturities too, so that makes it kind of tough. So it looks like high 3, low 4 for a lot of it. Now, if you want, you can get the 2060 bond for a little over 5%. 2060.
Jeez. Why?
There's a 2050 you can get at 5.1, 2035 4.4. Like I love Google, but why wouldn't you just own the equity?
I don't know. I don't get it. I don't understand why anybody be putting up money at 5% out to 35 years, 34 years.
And my guess is inflation over a good chunk of that time will run around, call it 3. So 2% real.
Stated inflation.
I don't know. There's a lot better mousetraps than that for me, but
yeah, I don't get it. It's not as bad.
No, it's not Apple selling 1%ers a few years ago or whatever, but
it's not Argentina selling 100 years.
Yeah, or Austria.
That was my favorite. The Argentinian 100-year. What could go wrong? Well, I don't know. They've defaulted 4 times in the last 100 years, but sign me up.
Yeah.
And did they default on any of those?
No,
bonds?
but
they got close.
Not that I know of. But the IMF has had to. Yes, if you really think
default,
about it, the IMF has had to give them the money to make the payments. The U.S. has had to help give them the money to make the payments. So,
yeah.
Not to mention they had to devalue their currency a bajillion % to make the payments. You get it.
Yeah, I think one of the interesting things looking back on this time in financial history, you'll sit there and be like, there were more people doing things that looked idiotic from the outset. Usually when you look at bubbles, you can go back and you look at it and go, well, at the time it made sense, Oh, get me into that Argentinian debt offering for 100. Like, I remember when that happened, I'm looking around going, is this a joke?
Yeah. Everyone liked hey, we got a president that's not a Peronist. He's going to change everything. So everyone was all about it.
Yeah. 7% yield.
And I think that is honestly a good example of how people's personal ideology can mess them up in investing. It's just like, hey, this guy's more like my political side. I think this 100-year bond is going to work. And it's like, yeah, that guy might be great, but they're going to vote again and he might not win the next one.
Well, look, I didn't say Argentina shouldn't do it.
Oh, of course they should do it. Yeah. I'm just saying, you do see this sometimes with American investors where they get their head around, and it's not always political. It can be,
Oh, I know. Yeah.
Global warming investments or the opposite of global warming investments or something. It's like, let's get in on that. And it's like, let's, if it makes sense, this doesn't,
Yeah, it turns into a moral cause rather than like
Right.
a financial.
I think that happened with Argentina back then. Hey, I was in there. I bought the Argentinian ETF because the guy won. Like it was like, yeah, like this place has been a dumpster fire, and this guy's not dumb.
Yeah, but buying the equity ETF is a lot different.
That was like a 6 months trade for me, and I made money, and I got out and moved on.
Yeah, you didn't get married for 100
right.
years.
Yeah, that
right. Like,
yeah.
and that's the
And if it's Argentina, there's no prenup. So
no. Well, and there's just so many ways to lose.
That's why I just don't like fixed income. I just don't get it. But
no, there's too much downside. You know what I mean? And then if I get it all perfect, I collect my yield. Now, where we will go down, having said that.
Yeah. So a good example of when you can nail it, and this company was in the news today. One of my favorite companies, Transocean. You were able to buy their bonds at the bottom of that oil cycle for literally pennies on the dollar, and they're money good. So
weren't they trading at less than 10 cents on the buck at one point?
If not close enough. So yeah.
Now and here's why that's saucy, guys. Not only can you make an 8 to 9x return on the underlying, but
then the yields were crazy.
Because if it was a bond yielding 6 at par, what is it? I mean, that's like
right.
What would that be? I'm playing 70% a year or something like that.
You don't want me doing that math. But.
Yeah, but I mean, so you're making 70% a year on your underlying investment, and then the underlying goes up 7 or 9x.
And sometimes you look at a Brazilian bond now, that's a big yield. And, if you got a real yield pushing near 10%, okay, like we can talk about this, but like in general, do I just want to hold something that like a Google bond that yields 5 for 30 years or whatever? I'll pass.
Yeah, for me to go on and want to take on a strategic position and kind of in debt of any kind, I got to see a blowout in the rates in the like I
want it to turn itself into a lottery ticket for me, where the convexity is there, where I'm going to just lose or win big.
100%. Yeah. Yes. And that's why I would never want to be in that space permanently. To me, it's like I want to buy that kind of stuff. And I'm even talking third world emerging market junk debt. There's a time to buy it. And it's when it's like the inverse. I was telling the story about the treasuries, right? Like one of our best trades during the whole COVID thing was being long duration. And and I remember I told you that day I got up in pre-market treasuries were up 7% in a single day, right? You had that blowout. Sold them. I want to buy that stuff when it's at the inverse of that. I want to see its yield go from 9.5 up to like 23. Right. Well, it's falling apart. And I'm like, okay, well now the risk reward looks a little bit interesting. We could take a little stab at that.
It's the funny thing about markets is like when you've been around markets long enough, you can no kidding feel when people give up.
And
whenever people give up on either side of a thing, that's kind of when it's like, now it's time to go the other way.
Yeah, a wonderful example of that was energy coming out of COVID. I mean, there was nothing.
People gave up.
There was just nothing but dead bodies. And we're looking around going, you can only go up from here.
Yeah. When you get that capitulation and sometimes this is both, literal forced selling, where it's like,
I was just going to say that.
People aren't selling because they want to. They literally have to. They know it's a bad idea and they do it anyway. That's when especially for like small investors.
Heck yeah.
Like that's when you should go jump at something where like, oh, big guy's got to sell. He doesn't want to. He hates it. He knows it's bad, but he has to.
Well, and I'll
take some.
Yeah. And that's the thing that I regret so bad about living through 08, 09. Now I was in a different position because I was up and from beginning of 08 till the bottom in 09, I think I was up like 25%. So I was not old enough and mature enough to get bullish when I should have.
Well, I was an E4 with two nickels to rub together. So,
but my point is, when the forced liquidation gets to a point where even the banks are forced liquidating, it doesn't mean you buy everything. But what it does mean is there's a bunch of stuff in there that they are unloading and they don't want to. Right. And it's why, another easy trade. And I mean that. People are like, well, you weren't there at the time. If I was there now, 100%. Go in there and buying those collateralized debt obligations when they went no bid. Like you knew, maybe 5, 7, 8% of this is garbage. It's not worth zero.
If you keep a reasonable batting average by buying a few, just the convexity takes care of everything else.
Yep.
Even if you're total zeros, it's fine.
Yep. And it's funny how the human mind assesses risks, especially in financial markets, because it's exactly inverse, right? The higher the price is, the safer people think it is. Lower the price. Well, look at that chart. You're like, well, yeah, it doesn't mean we buy it right here because we're sure it goes up. But when I'm looking for value, it doesn't usually come with a chart that's gone vertical over the past 4 years, right? It's just not the way that works.
All the best trades I think I've ever had were they made me feel nauseous while I was buying because it was so ugly looking in that time.
That's so true.
It's exactly why I was doing it, but it's still like I remember oil. Like I remember buying Exxon shares when they were going straight down, and everybody knew that oil was the worst place you could put money. And I knew they were wrong. I knew it, but it still felt gross every time I got in there and bought some more Exxon.
Well, especially when you're managing other people's money, because one of the things that goes through my mind is, look, I can stomach this volatility and this duration. Can the clients? You know what I mean? Like,
yeah,
I can hold this thing till it inflects. I just don't know if everybody else can. Thankfully, we've got a really great group of clients because we've lost some along the way. But if you look at like the clients that hung on for us waiting for this commodity thing to hit, I think we've got more patient than most.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate and actual performance may differ.
It's one of the things that I find really impressive about as these investors get bigger, that they are still able to produce the returns. Because as you get bigger, size on all levels comes with more constraints, whether it's just internal bureaucracy. You know what I mean? There's just if you're running a $200 million book versus a $2 billion book, it's not just the size issue. I guarantee you've got more employees, you got more mouths to feed, you got more internal dynamics inside of your organization, right? There's just more distractions, more things. So every bit of size you get bigger makes the job tougher. There's no respite. Very seldom does size help you in this industry.
Yeah, I think that's why some of the best investors in the world are people that you have never heard of that run a $50 million hedge fund. And if it gets to 100, they give back $50 million.
Yep.
Like those are some of the best operators there are. And it's because, they don't need a 100-foot yacht. They're fine with their lifestyle at the 50, but they're stone cold killers in the market. But they also know if they get to 150, 200, whatever it is, maybe it's $2 billion for a strategy, that it messes with their strategy and they don't, this edge they're playing with is gone.
Yeah, well, I mean, and it happens way sooner than people think. Like, there's several situations where we'd have made piles more money.
There's so many companies we'd love to have that we can't.
Oh man, yeah, they're just too illiquid, right? Like, if something went wrong, good luck getting your money out.
Right,
might take us a month.
And you can ask the LTCM boys if getting your money out could be a problem.
Yeah, including a lot of other boys. Do you got anything else to add on markets here? I kind of think that we're still in this kind of same, it's one of those environments where I feel like things are going crazy. And then, you look at, oh, it's crazy, volatility. And you look around and you're like, well, yeah, it's crazier, but it all seems to be on the same trajectory.
So I'll talk a little bit real quick about just the market itself, because I talked about this on Wednesday, Thursday, which we'll re-push. You were in negative gamma. So you're just asking for higher vol to begin with. And you're asking for a big face ripping rally that may not be as good as it looks because negative gamma helps push those two. So especially on the NASDAQ, you broke the uptrend line, started to kind of waterfall it. And this is like a decent length of time one and a kind of, horizontal channel that you've been stuck in. So you snap below that but you rallied up a decent amount Friday, and now you're up into that channel and retesting that uptrend line from below. Same as the dollar, which is interesting that the dollar and the NASDAQ are both kind of doing the same thing. Now, the dollar one's like a 15-year trend line. This is like a year, so not the same. But so the rest of this week gets kind of important because we're probably neutral gamma now and retesting big areas just a little below the 50-day on the NASDAQ. So like you're getting to a pretty important little point on the chart where, the market sort of has to declare itself here soon, just like the dollars. It's running out of room to not declare itself. So the way I would say is call it mid-March, maybe April. Like a lot of these markets that lately have looked like can't break up, can't break down, just what are we doing here, are going to have to declare themselves. And just helpful from a trying to figure out where we go from here standpoint.
Yeah, I think that's fair, because when you look at the macro wins, it just doesn't feel like anything's changed in terms of I still like where we are. I don't really feel any impetus to move. I still feel like I'm watching people play a really tough game that they don't need to play.
Yeah.
You know what I mean? It's everybody's talking about Meg 7. I'm like, why? There's way better rides in this amusement park.
And yeah, I still think and we've beaten this dead horse, but I still feel like it's an undertold story. The fact that these Mag 7 companies went from so capital light to being the most capital intensive businesses in the history of the world. That is just not getting enough thought, I still think.
And it hasn't even hit the valuations. I mean, you've still got investors, NVIDIA rallied the other day when Wang said, I think this spending is justified. Well, what did you think he was going to say?
Well, yeah, I think they might be a special case where they can really go from here, just because it's pretty clear everyone's still short on their stuff. And if you think about it, all the CapEx, so much of it goes to them, and they don't have to do the CapEx to get it. So you can make a right tail case for them because everyone else is going nuts with CapEx. And it's something I covered last week that I think is important is on the memory side, two big Chinese companies came out and said, "Oh yeah, we'll take care of it for you." And basically said, "We're gonna get after it on the capacity side for memory." So, and you saw that start to mess with the memory equities a little bit. They at least have stopped going up 5% a day.
Yeah, I mean that was fun while it lasted, but you're like,
yeah,
okay, this ride can't keep.
It's
going.
An interesting case study because it's like, okay, the capacity isn't going to be here tomorrow, but if you're valuing the equity, tomorrow is not the only thing you put in the value. You got to think about the next 10 years, 15, 20 years, and like knowing that the capacity is coming for them now. How do you? It's just fun to watch the market try to tussle with that stuff in real time.
Well, it's just fun to watch it because this market doesn't function like it's supposed to and like it has in the past. Meaning, it's just it amazes me how willingly this market will only look 6 inches in front of its face.
Yeah,
and I get it on some degree because there's so many unknowns. But it's not just with the AI names; it does with everything now. It's just so short-sighted, and I think that's probably your great time horizon has always been a big advantage to individual investors. I just don't know that that's ever been more true than it is today.
I mean, in everything in current life, like people can't even like watch film students. I saw this the other day. Film students can't even watch a whole movie now. Like, no one reads whole books anymore, hardly, right?
It's so
like
crazy.
So, I mean, TikTok dominates, any long form stuff, right? So, that's also found its way into markets where, the temporal arbitrage, if you will, has never been better. If you can look out 15, 20 years while everyone else is looking out 15 minutes.
You know what's weird? In a world that is, and what you said is 100% accurate, but in a world that is getting increasingly dominated by that short attention span type of information and relaying of information, why is it that and I don't say this in a way to like, it's an honest question. I don't say it in a way to be self-aggrandizing or anything like that. But that has all pushed me to longer forms. Like I feel myself being drawn to longer forms. I feel myself being drawn to more books.
Same. But I do both though. It's like I found myself having to consciously make 2 buckets and make sure that I allocate enough time to the long form bucket. And there's the real world bucket, call it the touch grass bucket, there's like our buddy Dimitri with doing like the in-person, events. And a big part of that is because of this. Like he knows most people don't do that anymore. And most like that went from being totally normal to unique, which is crazy, but it's true. And the same thing for people that read a whole book instead of being like, hey, ChatGPT, what did that book say? You know what I mean? Or same with an article so like a lot of people, instead of listening to this whole episode, they slammed it into their AI to tell what they talk about,
Yeah. Well, you know what? And maybe and here's a hopeful thing. Maybe in some situations that will help because I have seen some of those AI searches and I've performed some of them myself, where I've been kind of pleasantly surprised by the balanced nature of the bounce back you've gotten from the AI. At the same time, I think it's so symptomatic of so many problems we've got right now because everybody wants to have the 2 or 3 sentence, do I like Israel? Do I hate Israel? Am I for Palestine? You know what I mean?
It makes all that so much worse. Yeah.
It's so much worse because you're like, guys, look, if you want to know, I even hate putting it, if you want to know who you should cheer for, that should be a much longer conversation than what you're having, right? And nobody wants to have that conversation. And more importantly, when I hear somebody want to have that conversation, I hear both sides jump to conclusions about what that person thinks and why they're bad. And you go, guys, entertaining the idea, for instance, I'll use a for instance on this, and I don't want to get into big back and forth. So if I make you mad, you can send me emails. I'm not going to answer them. Okay. But the Israel-Palestinian situation is a perfect example. You can think it's totally acceptable to think that Israel is a good ally. Our relationship is important. We should defend them. It doesn't mean that we should let them outsource all of their foreign relations and diplomacy through us. I can think both those things, and it doesn't make me anti-Semitic.
These days, like the whole holding two things in your head at the same time thing is not allowed. Like you can't do that.
And the sad part about it too is there's so much nuance lost, right?
Life is not a Disney movie.
No. And if we had an earnest conversation about Palestine and Israel, I actually think it's a really important conversation to have because I think it is so emblematic of so many issues today and realizing the complexity of the world, right? Just getting the idea through your head that foreign relations and international relations are a little more important than G.I. Joe, meaning it's not who's the good guy and the bad guy.
Right.
Right. Because both sides are almost always convinced they're the good guy. There was a great line. I don't think you're the one that told it to me, but they were interviewing. It was somebody over the weekend. I think it was one of our employees. Anyway, remember the movie Inglourious Bastards?
Yeah.
Okay. Remember the bad guy in there? Okay. He was getting interviewed and they were like, how did you play such an evil guy? And he goes, what do you mean? They're like, what? How are you the embodiment? And he goes, you've got it all wrong. He goes, what made that so convincing is that I was so sure I was right. I was so sure that I wasn't evil, right? That was what it mean. So people even look at those Nazis, go, no, guys, what made the Nazis scary is they thought they were doing the right thing. Right. They thought they were the good guys.
Right.
Right. And it's like, once you get that concept, you realize, oh boy,
most things make sense with enough information. So,
and then you realize, holy smokes, that's a lot more complicated. And then you go, welcome to the world of adult decision making.
Yeah.
Right. It isn't because it's like life, it's like people run around. ICE is the Gestapo. Well, fundamentally, that's incorrect, guys. The point of ICE is not to round up citizens of our country and kill and imprison them. That's not their goal. So that's just a completely ridiculous, erroneous assertion. Now, if you're worried about the overreach of the federal government and whether they're doing their job correctly, dude, that's an American conversation to have.
Right.
Let's have that conversation. But I can't take it. If you're going to sit there and look at me and go, nobody should ever call into question federal officers or their Gestapo, I'm immediately not talking to either of you.
And that's where 80% of people are. So
at
least it feels that way.
No, and it just does. And the frustrating part is not that I have all the answers, because I don't.
Yeah.
The frustrating part is that nobody does, and we're not getting anywhere closer to them. That's the part that kills you, because when you see that going on, you go, we have no chance. It's like looking at a team that and they're losing and they're not doing well, and you continue and they get a new coach. We're going to do this. You go, yeah, but you haven't fixed your front office. It doesn't, we're not even having the conversation that we really need to have to get better. So yeah, I think the forward prospects don't look very good, right? If we're not even having the right conversation, our chances of figuring it out are zero.
One thing I'll add, the annoying thing about this to me is that there's never been a better time to red team your thinking than with AI, because it's such a great partner to red team your thinking. It's which is what I do half of my time on AI is just trying to figure out how I got something wrong, because it's really good for that. Or trying to understand the other side of whether it's an investment debate or any kind of debate. So you have the best tools in history to see the other side of what you're talking about, and everyone instead basically builds an amplification machine for themselves.
That's a great point. I hadn't thought about that. One of my best, most informationally dense, helpful AI encounters I've ever had was when I went on to Grok and I asked it about a particular company. And I just asked it, hey, is this as expensive as it looks? And so challenging my own opinion. And it gave me a readback that I still look at that company differently today because it gave me a list of like 5 or 6 things that I wasn't paying attention to. And it was right. And after I looked, but like using it to challenge your opinions as opposed to, what do they call it? Not, what is the, like strong manning your opinions, right? Not strong manning, but steel manning your own opinions. And that's what everybody does. They just want to be steel manned, right? As opposed to what's wrong with the way I'm thinking. And I think maybe that just comes from managing money because you realize if you're forced to realize it. It's the bullet I don't see that's going to get me. Right. It's the things I know for sure that just aren't so that's going to get me. Whose line is that one?
I think like all of them, it's attributed to
Munger.
No, I want to say that's attributed to what can't I think of his name now? Mark Twain.
Oh yeah.
But so is everything else. So I don't know.
God, I love that guy. It's an American treasure. Another thing that's an American treasure is the Super Bowl.
Yeah.
So I'm going to transition us not even awkwardly over into the football conversation. I'll start by saying it's not often that you see a game go exactly how you thought it would go. But I think a lot of people were surprised last night. I went into that game going, they need something really big to happen. They need us to make mistakes because I just didn't think there was any way. And I hate saying us. It's not like I play on the bloody team.
It happens. This is just how it is.
Right.
It's the American thing to do.
But for those people that want a lesson in football, last night, what you saw was one team clearly had a better offensive and defensive line. There were other factors involved, but just saying like, it's like an investment sheet. When you see one team that is clearly better up front on both sides of the football, 9 times out of 10, they're going to win.
Right. It takes something crazy for them to lose.
Yeah.
It literally is that simple.
And I remember going, I don't know if we talked, I think we did talk about it, but I went and my biggest thing was sitting there going, I just cannot see a second-year quarterback and an offensive line with troubles like New England has. I just don't think you're going to be able to move the football. And what did you have? You had, through the first 8 drives that New England had, May had 7 completions.
Yeah, I mean, he was well under 50% for most of the game. Like, under pressure, most dropbacks. Couldn't really run the ball effectively.
That was an absolute destruction. And it was similar, that was why I felt so confident about them playing the Niners that second go around. And I was saying, when you watch a team, if you tell me going into that the other one that I had in my mind going into that wasn't Drake, they were either worst or second worst in the NFL for giving up sacks.
Oh, really? I didn't realize that.
In that division?
I mean, they had 2 rookies starting on the offensive line. First Super Bowl team to ever have that. And they were next to each other, I believe. So
yeah. And if you would have told, like going into that game, if you would have asked me yesterday at 2 p.m. if I thought it was a decent chance that we put up 6 or 7 sacks to be the most number of, only reason they didn't get 7 is that
they took that one away
from Witherspoon
to turn it into an interception. Yeah.
Yeah. So you're at 7 sacks, most ever in a Super Bowl. It's what I would have told you I expected with that front 4 against a makeshift offensive line. Good luck.
Right.
I mean, that was just, and it was that simple. And I think I was telling you, there was a shot of about midway through the second quarter, there was a shot of Vrabel's face in the sidelines. And Vrabel's a dog. Like, he's never going to give up. I'm not saying that. But from one football guy to the other, I saw a look on his face. He's like, we're in trouble.
Yeah. And I just because you have no answers. I told you, I'm sure he knew the last 2 weeks. Once he watched the film, or it was like, yeah, this is gonna be a problem.
Well, and that was the thing that, you're always going, I could be wrong, but that was the thing about listening to other, supposedly well-informed football people that were saying, or that were picking New England or saying it's going to be a close game. And I'm looking at them going, the only reason you think this could be a close game is because Super Bowls typically are.
Right.
Otherwise, guys.
And I think the AFC was worse than people realized all year. And people didn't put that into their calculus enough.
No.
With a 4.5 point spread, that was kind of dumb.
Yeah, I mean, when you saw what that defense did to Kyle Shanahan and Brock Purdy, and you thought Drake May was going to give it a run,
and Drake May's really good. I think he's going to be.
I think he is too.
Yeah, great quarterback in the league, but
you had Trent Williams at left tackle, and they couldn't keep Brock Purdy clean, and you think that they were going to be able to do it?
Exactly.
Good luck. And I mean,
the Seahawks just had one kryptonite with LA, and that was it. And no one else was going to compete against them.
Well, and the kryptonite with LA, there's nothing schematic. If a guy is going to
Michelangelo playing quarterback,
dude, and if
and a really good offensive line and a really good receiving core, like,
and then you still look what they had to do to win that game.
Probably the best offensive coach in the league.
And then you look at the ball. I mean, at the end of the day, Stafford was still fitting the ball into 6
I think he played
windows.
About a perfect game and lost the last two.
Yeah. Well, I mean, he set a record this year. No quarterback has ever thrown for more than 300 yards and 3 touchdowns with no picks and lost a game.
That's crazy.
And that's why I just said, like, watching him against us and watching him previously in the year, I was like, if anybody else gets the MVP, you're out of your mind. Drake.
Thankfully, they got it right.
Yeah. Well, and May had a really good year, but look at again.
And he's in his second year. Like it's just different. Like,
well, if you put the Patriots in the NFC West, I bet you they were a 10-win team.
Yeah, 100%.
I
mean, they edged the Broncos. Granted, that was a weather game, but still, like, I mean,
with a backup quarterback.
Yeah, just I don't know.
No, and I think the Broncos, you put them in the NFC, same thing, probably 10 to 12 win team at the most.
Right. The AFC was not good this year.
No,
and most of those teams a lot of them were just ravaged by injuries, and the Patriots weren't. Like, one of the reasons they were there.
Now, I think the future looks incredibly good for the Seahawks. The only problem is the division we play in.
Yeah.
I mean, talk about just a murderer's row. And when you look at the front offices of all three of those organizations, Arizona's a mess. And until somebody other than the Bidwells owns it, I'm not going to be convinced they won't be. It's
a second-class organization.
They just make stupid decision after stupid decision where, like, Kyler Murray, they don't know what to do with him. I remember you and I sitting back going, you're paying him what?
Yeah.
What? The only way a Kyler Murray would make sense is if you got away with paying him like 25 to 30 million a year. You know, like a 20 to 25
right, that
million.
mid-range, yeah.
It's the only way it makes sense.
Right.
Because then you could have enough stuff around him to make it work.
I just don't like the guy, but and I don't want a quarterback if I can see his feet on his driver's license picture. But
that is a good one. I haven't heard that one before. Yeah, and you just see them make those decisions time and time again.
All I need is this is messed up, and this is superficial, but I'm going to stand by it. The reason I know I don't trust the Cardinals organization is their facility. It's atrocious.
Is it really?
Yeah, like if anyone goes back and watches the Hard Knocks I think it was the in-season one with them like 2-3 years ago. It was when Kingsbury was still there, and it's just bad. And it's just like, it just tells me this place doesn't take winning seriously. If they're not going to invest in, and I think they are finally building a new facility maybe, but they better be.
It's so weird too, because it's not a money issue.
It reminded me of Cleveland. Like, it's so obviously, you've been through a million coaches and GMs and quarterbacks, and it's like, all right, well, now there's a common denominator, right? And it feels like it's the problems up above.
Oh yeah. And that's just, yeah, I've had the pleasure. It's funny enough, when I was down in Arizona, for those of you that don't know, I was lucky enough to get to play in the waste management program. Played with Colin Morikawa. I'm sure that means a lot to you. He's a big golfer.
Had to look him up. Yep.
But 2-time major winner, stud of a player, 29 years old, and couldn't have been a better, just awesome guy. My sons were lucky enough to walk the course with me, and he sought them out. Like, he went up to them, was like, "Hey, what's your name? What sports do you play?" And he talked golf with my oldest son the whole time. It was awesome. My son was just on cloud 9, you know. And they renewed the golf bug back, because he's a really talented golfer, but he plays, football. Golf. If you're a good golfer as a junior golfer, it's easy. It's a very easy sport to get distracted by other sports, because most of your buddies aren't like, "Hey, want to go play?"
Right.
But while we were there, when we were leaving, I ran into Buda Baker, the safety and he was there with I'm assuming it was his wife, but I was like, and he's from Bellevue, 30 minutes up the freeway. And I said to him, "Oh, Buddha." And I go, "Man, when's free agency come back, man?" I was like, we want to get you back home. And he just laughed, didn't say anything. But I was kind of thinking to myself, and I wasn't going to say it, but I was like, "Dude, we got to get you out of here, man. We got to get you back to a good organization."
Seriously, that guy's been wasted.
Oh, yeah. And like, now at the same time, you tip your cap for like picking him, because you're like, that's the kind of talent you should go after. But it's just, you watch these disaster organizations over and over and over make these decisions. You're just looking at them going, what are you doing? And drafting, to me, you and I have had this conversation. if you look at the Seattle roster right now, it is a perfect example. When they were drafting the defensive backs, everybody's go look at the draft grades they got like in the last 3 draft years. They got, I think 2 out of 3, they got panned by people because you're like, that's not a need. That's not a need. And like you and I have talked about, I think that every one of these front offices in the NFL could benefit drastically from having a money manager, finance person in, not to help them manage the salary cap, but to think about the way they draft. When you are drafting players, the position they play or the need you have should be 100% immaterial. You are picking assets.
I'll push back. I won't say 100%. I think it has to enter the fray some, but I think the average team absolutely overweights it way too much because almost every pick in the first round you can guarantee will be a need.
Okay, well, so my point is, if you get down to 2 players and you've got them graded identically,
all tiebreakers should go to best player. Yeah.
No. Or I'm saying if it is a tiebreaker should be need.
Right. That's what I mean. Sorry.
But get the asset, because once you've got the asset, you can trade it for a known commodity, right? When you're in the draft, they're all unknown commodities. So only bet on the ones you have the highest level of certainty about them being a player, not whether it fills the need. It just makes it too complicated. You know what I'm saying?
Yeah.
And
certain positions are notoriously difficult. So I even think it makes sense to just kind of stay away from some positions.
Yeah.
And overemphasize others.
Yeah.
And if you know as a front office, you are good at finding talent in a certain position, maybe just DBs. It's like you just always nail those. But every time you pick, a receiver, it doesn't work.
Yep.
Lean into that. Like just go collect the DBs because you're actually good at it.
Yeah. Or trade a couple for the thing
That's
you
what I'm
need.
saying. Yeah, right.
Yeah.
Because if you get too many, that's fine. One of them's going to leave in free agency, or you can trade one, or like it. I don't know.
Yeah, because the worst thing, and you've got to think about it in the context of a salary cap, right? Because the worst thing that can happen on an NFL roster is that you've got a guy sucking a bunch of salary cap and you're not getting anything out of it. That's the worst. It's just dead money. And so how do you avoid that? It's not perfect, but you'll have a much higher hit rate if you're picking the best. The crazy thing I heard, they did an interview with Schneider. They were 2 to 3 picks away from picking Nakua before the Rams grabbed him.
That would have been crazy.
So picking up JSN and Puka Nakua in the exact same draft. Good.
So they should keep leaning in on receiving talent.
Yeah, well,
they can definitely figure that out.
I guess they break down their board, and that because I think it was with the Witherspoon draft. I think that was the draft that JSN and Puka Nakua were in. And the two, they have a bunch of different ways. One of the ways they list players is the competitiveness. And the 2 highest graded players on their board were number 1 Witherspoon and number 2 Nakua.
And Nakua is definitely a competitor.
Yeah, he's tough as nails. No, I thought that was very satisfying to watch.
Yeah. So I want to add one thing before we're done here, as we touch an hour here almost. Yeah. And we talk, like you talk, like think they're going to win the game because they're just better up front. And from a value investing standpoint, this reminds me of Moneyball and baseball, where like there are ways, just known ways to find undervalued stuff, like walks being just as valuable as a single, but that's not the way anyone looks at it. It's like kind of the biggest example. And I have always thought this with football, that no one values the trenches correctly.
Agreed.
Everyone just kind of skips over, like, we'll just slap together the best 5 guys we can find in the offensive line. It'll just work itself out. Let's go get some Ferraris. But then, like, you watch a game like last night, they could have had Randy Moss and Jerry Rice in their prime. It just wasn't really going to matter.
Mm-mm.
Like, so the fact that people undervalue it. So if I was a GM, I would have so much of my focus on O-line, D-line. I would be so heavy every year in the draft because I know everyone else is going to let it go. Like no one's drafting that good center or guard high enough. No one's drafting that D-tackle. Well, sometimes D-tackles go higher now, but like I'm going to find those guys. I'm going to overemphasize them. Not to mention, except for tackles and DNs, none of them get paid anyway.
Mm-hmm.
So like lean in on that stuff that no one else is looking at because you're going to get the value.
Yep. Like you and I have talked about
college included.
Yeah.
If I was running an NIL collective, I'm like, here's the O-line bucket. It's huge. Your quarterback bucket's small. I don't care. Shut up. Go get these linemen.
Indiana.
Yeah,
hello.
Right. They paid nothing for Mendoza.
Yeah. And that's, it's shocking how even pros in the business can get sucked in by the talent. And my whole thing is, if your quarterback's on his back, that receiver doesn't matter.
Yeah. He can do whatever he wants, but if you can't get the ball, no one can open a hole for him. Like we talked about Ashton Genty with the Raiders. He was great, but their offensive line was so bad, it just did not matter.
Ken Walker's a perfect example. Everybody's singing his praises. Did anybody know his name last year?
Right.
Why? Because they were fixing their offensive line.
Yeah.
Right. And now all of a sudden, I hope we keep him, but somebody will probably offer him too much money, is my assumption. And I'd hate to lose him because I do think he's a rare talent.
Yeah.
He's so much more explosive than people think. And I've been kind of like,
he's like Nick Chubb and Le'Veon Bell had a baby.
Yeah. Yeah. A little smaller, but just as tough and fast. And anyway, that's 100%. Those are great pieces to have, but they don't mean anything if you can't block for them.
Yeah.
So if anybody hears that and wants to hire Chase and I to work on the front office for the NFL, we'd happy to do it. We can moonlight as NFL GMs. Anyway, that'll be it for us. We got to run. You guys know the drill. Catch us on social media at KYR Radio. Chase is at Pinecone Macro. Follow the video feed on YouTube, Know Your Risk Podcast. Have a wonderful evening. We'll see you tomorrow. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.